Hello everyone, I'm John with JP Strategic Investments, and today we're going to talk about some exciting news from Tesla. It was just announced that they will be added to the S&P 500, which obviously investors have been waiting on for a while now. So we're going to talk about exactly what that means, when Tesla will be added, and how much Tesla will make up of the S&P 500, which will determine how much stock the S&P actually needs to buy. So first of all, we just got this announcement today, so there are some details that may be changing, but we're just going to talk about the information we have right now. So it looks like Tesla will be added to the S&P on December 21st. Now, there is some talk about how adding Tesla could be a little different than adding other stocks because of how large its market cap is. A spokesperson from the S&P said, quote, "Due to the large size of the addition, S&P Dow Jones Indices is seeking feedback through consultation of the investment community to determine if Tesla should be added all at once on the rebalancing effective date or in two separate tranches ending on the rebalance effective date." So let me kind of break that down. So Tesla currently has a market cap of just under 400 billion, which would put it just above Procter & Gamble in the 9th spot in the S&P 500. This means that most likely after the S&P purchases the shares, Tesla will make up about 1.3% of the S&P 500. Considering that the S&P currently has about 11.2 trillion funds under management, this would mean that the S&P would have to purchase about $145 billion worth of Tesla. Now, this is over 1/3 of their market cap, so it's going to be interesting exactly how this will work because it's going to take a lot of shares off the table. This means that there will be less shares available to trade on the open market, which could make Tesla stock a little less volatile. Now, there are pros and cons to this. Obviously, one upside is that a more stable stock price could entice more investors to invest in Tesla stock who may have been hesitant to invest before because of how volatile the stock is. On the downside, this also means that the movement of Tesla stock will be more correlated to the broader market. This is because a lot of shares will be tied up in index funds. And so if the market as a whole moves down, this will also bring Tesla down as well, even though the factors bringing the market down may not directly affect Tesla's business. Now, obviously, overall, this is a major positive for Tesla, as you can see in the share price after hours. Tesla is up almost 14%. This is partly because when the S&P makes their purchases, it will artificially move the stock up. But it's also because entry into the S&P 500 legitimizes Tesla as an investment for many investors who may have been sitting on the sidelines. Also, a lot of investment funds have restrictions on where they can put capital, and sometimes if a stock isn't a part of a major index, then there are restrictions on how much money they can invest in those stocks. So inclusion in the S&P 500 will make Tesla stock available to even more investors. Also, it just brings more recognition to the stock, and it's a huge validation for Elon Musk and the Tesla team. So this is what we know for now about the inclusion. As far as how it will affect the stock, obviously you can see it's a huge positive. I wouldn't be surprised if we continue to see this run over the coming weeks. So I hope you found this analysis helpful. Congrats to all of you Tesla investors out there. And if you did find this video helpful, please consider liking and subscribing, and have a great day.